When it comes to owning real estate, certain states have far more tax benefits than others. Today, I'm going to reveal why Florida is one of the best states to own real estate in. I will break down all of the hidden tax perks of owning property in this beautiful state. I will also answer a key question from one of my tax subscribers that you're not going to want to miss. Without further ado, let's dive in. Number 1. No state income tax. Only a handful of states in the country do not have income taxes. Florida happens to be one of the states, along with Texas, Nevada, and several others. Zero income taxes in the state of Florida does not just apply to the money that you earn working a W-2 job or a 1099 business. It also applies to your rental income. You see, a lot of people are unaware of this, so if you happen to invest in a rental property in the state of Florida, don't expect to pay 5, 6, or 7, or even more on the money you make in the form of state income taxes. Instead, you'll get to keep the cold, hard cash that you would have otherwise had to hand over to the state income taxes if you lived in a state that levied those income taxes. The lack of state income taxes is one of the main reasons why many real estate investors choose Florida as a place to constantly invest in. But the big reason that they also come here is the Homestead Exemption. Just as some states in the union have no income taxes, others have something called a Homestead Exemption. A Homestead Exemption is a property tax benefit that certain people can qualify for. People who have primary residences in the state of Florida can be eligible for this Homestead Exemption. This is a tax benefit used to allow qualifying residents to reduce the assessed value of their homes by up to $50,000. So for example, if your home is assessed to have a value of $400,000, you would pay property taxes relative to that amount, except if you had the Homestead Exemption, it would drop your value to $350,000 for the sake of paying property taxes. The first $25,000 of this $50,000 applied to all tax authorities in the state, while the second $25,000 only applies to local governments. However, in 2024, Florida voters passed Amendment 5, which made a change to the Homestead Exemption. Now for 2025 on, the Homestead Exemption will be adjusted for inflation every year, which can lead to even larger exemptions. Now, the third reason why people invest in Florida is the Save Our Homes cap. The state of Florida has another very interesting tax benefit for homeowners, and in 1992, Florida voters voted to limit the annual assessed property value increase to 3% or the rate of inflation, whichever is lower. This is a massive hidden tax benefit of owning real estate in Florida because it prevents Florida homeowners from having their property taxes skyrocket if the price of housing in the state moves up quickly, which it often does. Keep in mind, guys, that the tax benefit only applies to properties that are homesteaded. So if you have 12 properties in Florida, you won't be able to use this benefit for all of them, only the property that qualifies as your homestead. When you sell the property, the limit on the assessed value is removed and the property is then reassessed. So let me give you an example. Imagine that you owned a property in Fort Lauderdale, Florida, and that this property is your primary residence and homestead. Last year, the property was assessed at a value of $500,000. Now imagine that property values in Fort Lauderdale shot up by 10% this year due to millions of people fleeing high tax states like California, Massachusetts, New York, and New Jersey, and moving to Florida. Even if the market value of your property also increased by 10% to $550,000 because of the Save Our Homes cap, your property would not be able to be assessed by $550,000, and in fact, the maximum value that it would be able to be assessed at would be $515,000. This is because 3% of $500,000 is $15,000. This is an amazing tax benefit of owning property in the state of Florida, and it is a hard one to ignore. It can make a tremendous amount of difference in terms of total property taxes you have to pay over substantial periods of time. The longer you own property and use it as a primary residence, the more important that this tax benefit is to you. Number 4, property tax benefits for the disabled. The state of Florida has some solid property tax benefits for people who are permanently disabled. For example, Florida residents with a total and permanent disability and veterans with at least 10% disability caused by a service-connected health issue are eligible for a $5,000 property tax exemption. So if you are injured while serving in the armed forces, or if you are totally disabled from another cause, then you qualify for a reduction in your property taxes by a total of $5,000 in the state of Florida. Wow. That's awesome. Men and women in uniform go through a lot to protect our country, and there are a wide array of injuries that can sustain on the job that can cause disabilities. So I'm glad that people who served our country are able to get property tax benefits in the beautiful state of Florida. I'm also glad that Florida provides benefits to non-veterans with disabilities as well. Okay, let's keep moving. Number 5, no Florida estate taxes. Just like it does not have income taxes, the state of Florida does not have estate taxes. And in fact, the state completely abolished its estate tax in 2004. If you're unaware of what an estate tax is, it is a tax on the estates that people leave behind to their beneficiaries after they die. There are both federal estate taxes and state estate taxes, and estates have to be a certain size in order to qualify for an estate tax. Not all states charge estate taxes. However, because Florida is one of the states that does not charge estate taxes, it means that it is much easier for heirs to inherit estates that include properties without being bogged down by estate taxes. However, keep in mind that even if you will not owe any estate taxes on the property you inherit in the state of Florida, you could still potentially owe federal estate taxes if the estate you inherit is large enough. For example, in 2025, you will have to pay federal estate taxes if the estate that you inherit is larger than $13.9 million. Here are some other reasons why Florida is a great place to own real estate and why I own real estate there as well. In addition to the tax benefits that I just mentioned, there are many other reasons why Florida is just a great place to own real estate, whether you're buying a primary residence or a rental property. For example, Florida is famous for its warm weather, sunshine, and beautiful, gorgeous beaches. These things help to draw people to the state every single year who are looking for a more enjoyable climate to live in. From Siesta Key to Palm Beach to South Beach, Florida has some of the best beaches in the world, bar none. So if you love the beach, then this state could be a great option for you. Florida also has gorgeous towns and cities such as Miami, Sarasota, and Boca Raton with an abundance of high-end real estate. It's no coincidence that billionaires like Donald Trump, Jeff Bezos, and Ken Griffin all own properties in the state. You guys know that I'm a big fan of Florida, not just because of the experiences that I've had growing my business in Florida, but this is also the place where I bought my first short-term rental that helped offset my taxes by $113,000. Now, as promised, I'm going to answer a question from a subscriber, but before I do so, I just want to remind you guys that my tax-free wealth challenge is taking place March 10th through March 14th. It is right around the corner, and we will sell out of tickets this go round. The event is one of the largest digital tax conferences in the world. During this event, I will teach you the most advanced tax strategies that I know. These strategies are the ones regularly used by the top 1% of all taxpayers in the United States. They have the power to reduce your tax bill by 50 to 100%. If you want to learn how to leverage money to save on your taxes the right way with tax strategy, I am going to teach you how to do so during those 5 days. Click on the link below to grab yourself a ticket. Okay, back to my subscriber question. This question was asked by Joe Brooks 9175 on my How to File Business Taxes for the First Time video. The question was, Karlton, do I still need to save the gas receipts or any other receipts if I use my business bank account to pay for it? If the transaction shows in the bank statements, isn't that proof for a tax write-off? The answer is yes, you still have to save your gas receipts because the IRS wants to see what you spent your money on. Just because you went to Home Depot doesn't mean that the $1,000 that you spent at Home Depot was all for business. The receipt validates your expenses. I hope that this helps you. My name is Karlton Dennis. I look forward to seeing you at the Tax-Free Wealth event. If nothing else, I look forward to seeing you on the next video. Like, comment, subscribe, and let me know if you like this video. I'll see you on the next one. Cheers.